Kerry, in your global role, you also cover longevity risk transactions. And what do you see as the trends globally for longevity risk transfer?
Sure. So I think obviously longevity is an increasing focus, both society-wise and for reinsurers, with this need of protecting longer lives and ensuring benefits and payments to longer life policyholders. One of the key themes that we see is this need to move defined benefit contribution liabilities from the pension schemes to the insurers. And that's where reinsurance has a place to play by both providing pure longevity transfer, but also we've seen this massive rise of asset intensive backed transactions as well. The whole of longevity really started in the UK, primarily not just because of the depth of the defined benefit scheme need, but also the regulations in the UK which saw value added by entering into a reinsurance contract. So those capital regulations around longevity risk is really key as a primary driver for the transfer of that risk. We see developments globally where regulators are looking at the capital charges around longevity and thinking about what should be maybe more appropriate. But until we really see regulators start charging fully for those regulatory capital for the longevity risk, I don't think we'll see so much more transactions on the longevity front. We have seen, though, developments where we're seeing regulators starting to move towards that, and that's where you've seen the Dutch market change. We expect to see regulatory change in Japan as well, and there's some views as well about several other Asian countries of whether they can make changes. For ourselves, we have quite a large longevity portfolio. We are excited to grow it further because we think it really brings value to our insurance clients. Our book is dominated by UK risk, but we also have some Singaporean risk and Dutch risk in there. So really looking to expand that and try and take other territory risk as well as part of the larger portfolio.
So alongside with longevity risk transfer, how do you see Swiss Re is supporting the general aging topic globally?
So we've actually done a couple of papers recently around ageing and the silver economy, and one specific to the Asia region, which has been issued from the Swiss Re Institute. I think the big question is not just about pensions and how those pension schemes can be set up well for the policyholder, but what other products should there be to best serve those policyholders in their decumulation phase. Currently, there's a lot of focus on the accumulation phase, but then when you look to decrease it, what are the policies that best serve those policyholders? And that's the conversation we're trying to start across the wider industry right at the moment.